Welcome to this Simple Market Update. My name is Jason Hamilton, and I'm the founder of Keep It Simple Financial Planning. And in this video, we're going to discuss 5 of the most important issues for investors to be aware of as we head into the final quarter of the year. Q4 is beginning amid a new market all-time high, the final weeks of a long and tumultuous election season, and a shifting economic landscape as the Fed has begun its rate cycle. So through these events, it's important for investors to maintain perspective. Markets have performed extremely well this year, despite many of the fears that investors have faced over the past 9 months. Over the next few minutes, we're going to discuss how investors can continue to stay focused on long-run trends. First, this chart shows the S&P 500 alongside the number of new all-time highs each year. As you can see, the stock market has reached many all-time highs this year, and this reflects sustained earnings, economic growth, and positive investor sentiment. All-time highs are naturally occurring part of the bull markets and not a sign that the market is due for a pullback. History shows that bull markets may lead to many new all-time highs each year. Attempting to time the market based solely on its level often proves counterproductive. So while the market swings are inevitable, predicting their timing is challenging, and history shows that markets have generally made both higher highs and higher lows over time. This is why staying invested is preferable to trying to time the market. This brief pullbacks in April and August of this year underscore this point. Second, this chart shows that the market tends to grow across both major political parties. As the presidential election approaches, it's important to maintain perspective about what impact politics actually has on the stock market. While policies can impact us as individuals, when it comes to the stock market, there is no clear and consistent trend pointing to either party being better or worse. This may be surprising to some investors. Instead, returns are correlated far more closely with economic cycles, corporate earnings, and other factors that are unrelated to who occupies the White House. While political policies can affect various aspects of the economy, their implementation and impact are often gradual and overestimated, emphasizing the importance of focusing on long-term trends rather than short-term political developments. Third, the Fed recently began its rate cut cycle, which will likely continue through 2026. This is in response to moderating inflation and a softening labor market. The most recent inflation data shows that prices are up 2.2% from a year ago, approaching the Fed's target of 2% inflation. Meanwhile, unemployment has trended upwards in recent months. At 4.2% currently, it is still relatively low to historical standards, but that shows that there is some slackening in the job market. The current economic situation recalls the soft landing scenario of the mid-1990s, paving the way for continued economic expansion rather than a crisis-driven rate cut like we've seen at other points in the Fed's history. Fourth, Fed rate cuts have led to lower interest rates and a disinversion of the yield curve, creating a bull steepener scenario that can be positive for bonds. This chart shows annual returns along with the largest intra-year declines for the Bloomberg U.S. Aggregate Index. Bond prices are benefiting from the current environment, with bondholders potentially benefiting from both higher yields and price appreciation if rates continue to decline. Lower rates can stimulate economic growth by reducing borrowing costs, potentially improving corporate earnings and fundamentals, highlighting the importance of maintaining a balanced portfolio across asset classes. Finally, global conflicts, particularly tensions in the Middle East, are escalating. While these events have major real-world impacts, their effects on the economy and stock market are less clear-cut. Prolonged market downturns are linked much more to major market events such as the dot-com crash or the 2022 rate hikes. While regional conflicts can affect oil prices, the current increase is modest, and the U.S.'s position as a major oil producer provides some economic insulation. Despite geopolitical uncertainties, the stock market has shown resilience, emphasizing the importance of staying invested and focusing on long-term financial goals, especially with more Fed rate cuts, upcoming elections, and the market near all-time highs. We hope you found this high-level summary of major themes helpful as we begin the fourth quarter. If you have any questions, please don't hesitate to reach out. You can find us at keepitsimplefinancial.com, and we look forward to speaking with you.